first.
Okay, go first.
I'm Alex, LBC Mortgage. We do mortgage loans, and I today with Alexandra Chernukha. She's the agent. We've been working together on a couple of deals, and we just want to get together today and share information that we got, some recent information, some recent news and updates that we want to share with everybody. So, Alexandra, your
okay, my turn.
my turn.
Yeah. So I think this kind of started when I believe we were on a call and we were talking, and it came up that, you know, a lot of, I guess, mortgage applicants were getting a little shy in the market because interest rates were going up. And the question came about, you know, is this a good time to buy? You know, are there opportunities for buyers in the market now that there might not have been a year ago? And I think you and I both agreed that there absolutely were opportunities out there for buyers.
Of course.
And, you know, right now, what we're seeing in the market is that what had happened is if we look at the market and we compare like July of 2021 to July of this year, and we look at like median home price in Los Angeles County, we actually see that home prices are up about 3%. When we then, you know, did the comparison from August to August, they're up about 0.5%, 0.6%. Now, what's really interesting is what had happened, and we all saw this, was, you know, the market was high last summer. We saw kind of a slight dip in the fall, but in the spring, all the buyers who had been looking for 2 years and were really, you know, invested in getting that home hung in there and they fought. So the spring market was super, super hot. Prices went up incredibly. And, you know, in LA County, they really peaked in May. So now if we look at prices from May until now, and we look at single family homes, again, this is broad, all of LA County, we actually see that the median price from May to now in August is down 7%, which is huge.
Yeah.
So I think right there, you know, all the buyers who, you know, in 2020, 2021 were saying, hey, we want to really wait for that market to shift where we're not seeing 20, 30 offers on a home, where we're, you know, not, you know, fighting tooth and nail and, you know, coming into the contract. I think, again, everyone always thinks in terms of price, which is obviously paramount. It's the first thing we think of, but there's also a lot of other terms when we put a deal together. So a lot of those buyers were coming in, no appraisal contingency, a lot of times no loan contingency, sometimes not even an inspection contingency, which when you're going in and you're buying a property, that's scary. You know, you're coming in completely bare. So there was risk, a lot of risk back then that a lot of buyers were not ready to take on. And now that we're coming into this market and we're starting to see the prices come down because of interest rates, they have a lot more opportunity. So we're not seeing those same, you know, crazy multiple offers on every property. We're not seeing that same feeding frenzy, and that gives them more leverage.
Yeah, I agree. It's like our mutual client, which just recently closed, right? You guys been looking for like what, a year for him?
Oh yeah, over a year. Over a year.
And it was like many offers, with like some aggressive offers, with no continuous enroll, and he still couldn't get to the property that, I mean, after like only a year, you were able to get something for him that
he
was
wanted.
getting whatever he needs. So it's not only that seller will accept it, it's something that first of all you need to like, and seller accepting. It's, you need to have two parties at once.
Exactly.
Yeah, but what do you think about, like, my view from all of that is like whatever we saw in COVID times, that crazy jump in prices, and like that's abnormal, and we don't see, people kind of got used to hearing 2% rates and high, you know, and higher prices, that everything's going down, like up 20% a year.
Yeah.
My view of it right now, that, and maybe I'm a little bit wrong about it, but it's not that prices are like dropping, but they are slowly increasing. Meaning, like, if last year we got 20% increase, for example, right, and this year we got let's say 3% increase, for example.
Mhm.
And a lot of people, sellers, been overconfident and selling their property for something that's not actually worth whatever they're selling.
Mhm.
So if I sold my house for $1 million, you put your on the market for 1.1, and our neighbor did 1.2, and everybody's buying anyway. Now, the new buyer will be buying pretty much with this 1 million that it's worth. Is
Mhm.
it correct?
Correct. And I think that also kind of taps into something that changed very drastically during the times of COVID. And I think that's kind of the appraisal contingency.
Mm-hmm.
Now, years ago, and again, I mean, 2% interest rates, I mean, first we can talk about that. 2% interest rates, 20% growth, that is an abnormal market. I've never seen that in my career. I don't know other agents, who've been licensed for 30
No,
years.
nobody, it's never
It doesn't
happened.
exist,
It's never happened. Yeah.
it was beyond abnormal. It was, historic and, one of those crazy times. So with that said, though, is, what was happening is the prices were growing so quickly that you couldn't get appraisals in. So, first what was happening is, we'll take your example, let's say a house sells for $1 million. Well, a month later, the next one's selling $1.05 million, then 1.1, and it's just growing so quickly and people are outbidding it. We didn't have the comps.
Mm-hmm.
So we would all do everything we could. We would do all our homework. We would, sit there and, try to dial in all the appraisals. And it came down to having a conversation with your client and saying, hey, look, this is where the comps are. Our expectation is your appraisal is going to come in somewhere between here and here. Where do you want to be at for the property? Because end of the day, if you don't have that appraisal contingency, the buyer's coming out of pocket to make up the difference.
Yeah.
And what was so strange about that is that when we were going into these, bidding wars, let's say with, 20 offers, a lot of them, at least more than half, didn't have an appraisal contingency.
Mm-hmm.
So it became more of a norm where that never was the norm before. Now, on the flip side, and I think this is an opportunity for those buyers who are out there who still, are looking, is that now your appraisal is actually your best friend because we have these high comps. We have, like we said, like the market, again, when we look year over year, like you said, we're not seeing a real decrease in the market. It's just that there was a huge, at the very end in the spring, there was this feeding frenzy before interest rates went up. And that really just pushed it to the roof. So, but that gives us great comps. So now, when you go to put an offer in on a property, there's homes that are sitting on the market longer and longer and going through price reductions. Again, going back to LA County, in Los Angeles County, the California Association of Realtors said over a third of single family homes had a price reduction in July. That's huge.
No.
And, if you get there, ahead of the game and you're active and involved and you have a team behind you who's involved, we can look at that and we can structure a deal to help offset your interest rates by maybe getting a credit from the seller to buy down the rate or to buy down your PMI. Or, there's a million things that we can do to structure it to try to, leverage that for you. So now you have a higher appraisal, it's appraising for more than what you're paying for. That gives us, more room to play.
Yeah, for sure. A lot of people don't know about that they can actually structure the purchase that way that seller can pay for some of the cost. And a lot of, again, from all, from all this, what happened a couple of years ago, everybody was just like, I'll give everything. I'll give my kidney away just to buy the house, But now it's changing to a buyer's market, and as I understand, right? And buyers have more opportunities now than that had 6 months ago or more.
Oh yeah, absolutely. So again, we take that idea of $1 million property. Well, maybe they can't get them, it's listed $999.99. And, they can't get $1 million for it, but, it's sitting there and, I'm sure they're having tons of activity. That's another thing we agents are seeing is tons of activity, big active open houses, but, it's not translating to the same multiple offers that we had before. And so, again, maybe we get that at 980, maybe we get something where it's like, okay, we're going to offer you $1 million. we want 20K to close to our closing costs, and we're going to use that to help offset that interest rate.
Yeah, that's a really good strategy.
Yeah. And I think that also goes to the point of, you know, there's a lot of information out there online. And, you know, yes, you know, we all try to find, you know, off-market property to find the exact right property, you know, especially speaking about that client we worked with before. You know, when you're buying a home, you're not just buying anything. You know, you have to want to live there. You have to be happy there. You know, it has to be the right fit. It's not always all about the numbers. And that can take time too. So when you're trying to time the market, and here now we have people trying to time two markets. They're trying to time prices on houses and interest rates.
Yeah.
It's very, very complicated, because even if you hit that point where you go, okay, I think interest rates are as low as they're going to go and prices are as low as they're going to go, well, now you have to find a property before stuff starts readjusting.
I would say it's impossible.
It's impossible.
It's not, you cannot, we are professionals in that field. And I mean, I don't know like when exactly what's going to happen, right? We hear rumors, rates might go up, they might go down, but nobody knows. And you're absolutely right. The first thing person used to look is that actually you're not buying a car for 2 years that you can just drive a little bit and then give away. It's a place where you need to be safe, live there, be happy. You know, school districts, jobs, whatever, everything has to be has to match. And it's I talk to a lot of people, especially now, a lot of people starting to have these comments that, you know, like, do you know rates will drop? Not rates, prices will drop like in September. Like they know specifically it's September, right? Not like in general. So because they hear so much information, TV, people, internet, all that. And the bad news sells. So if you go online right now, all sad faces on the, you know, they're trying to click, so you can click on their on their YouTube page, that it's gonna fall, everything's crashing, this and that. People need to understand that they are trying to sell their product is the information, right? Don't, if it's for you to live, don't forget that people, you need to live somewhere, right? You need to either rent or you can either pay for yourself place. So that's kind of the main point people missing, that they think that when they timing the market, they live for free, like they're not paying rent. But with current rents in LA, for example, I was also reading some statistics. It went up 10% already. I think like only this year. And with inflation and with everything's going on, it will continue to rise. It will, the rents will go up, and if we see, I don't know, average rate, if it's like a 2-bedroom, I don't know, if it's a house, I don't know, you probably know better, like 3,000-4,000, that's kind of, I guess that it's a steal if you can find something.
For a house, I mean, rents, you know, especially in our area, it's so expensive. I have an investor client who just shared with me that he rented out a very small 1-bedroom that we had got for him, you know, a few years ago, and multiple applicants at $2,000 a month for a very tiny, you know, 1-bedroom. And it was the lowest priced rental on the market. And that's just, and you know, again, this is for, you know, maybe a single person, maybe a couple, but it's a very small 1-bedroom. It's I myself cannot keep up with the rates, because we also like we buy investments and we rent them, and sometimes I'm shocked myself that how much is the market rent right now for whatever we, you know, if tenant moved out, for example, and we want to put it back on market, you know, like a small house, like we just rented like 1,200 square feet, like $4,500 a month, and people are like, there's multiple people that want to get it, and comparing, so that's, if we just do a quick, I don't know, I'll just do it right now, 4,500 times 12, it's 54,000 a year. A person will basically pay someone else's mortgage, but he's going to wait a year or two
for market to drop until gonna save $50,000 in purchase price, for example, but he's gonna overpay $100,000 in rent. That's what people are kind of always forgetful of where they currently is. If they're paying, I don't know, if they live with the family, even if they live for free with the family, it's still the sooner you start paying for yourself, the better it will be at the, in the future.
And I think that's also something that, we've all watched too, buyers who stay on the sidelines and, they don't, for this reason, they don't want to get in the market, for this reason, they don't want to. And, there's always, that hesitation, again, when it was all these offers, it was, well, I don't want to go up against 20 people. Well, I can tell you, like, we won a lot of them, and it doesn't mean that you're necessarily overpaying, you're paying the market value, and, we've run all the numbers and again, interest rates were so low. So what's happening is that, those same buyers, even with prices, starting to come down, interest rates are higher. So to them, their payment each month is actually more than if they had just pulled the trigger 2 years ago,
Yeah, but you're absolutely right. But, they say, marry the house, date the rate. So you have to marry the house. This is for long term.
Yeah.
Rate changes. If today is 6, 5, whatever it is, in 2 years, whatever it's going to be, 1 year, we're going to have a lower rates, and we're getting that to the point that next year we'll probably see lower rates. Refinance and get a better payment for you. But my kind of approach to that, I always ask people that they say, well, how much can I qualify for? My first question is how much you are comfortable with paying. So concentrate on the payment. Like, for example, you can be qualified for a $2 million home, but you won't be comfortable paying for a $900,000 home, for example. So it's not, maybe your income stream is good. There's a bunch of unique programs right now that we can qualify you for higher prices, but where are you comfortable? So I never, when I was buying my first property or second, I never looked, if I lived there, I never looked how much the value of the house after I bought it. I mean, it wasn't matter if it's higher or it's down. I still need to live somewhere. It just, if I only care about it when I'm going to be selling the property, then I'm care, okay, how much it is right now. But, people like to just say, hey, my house just went up, 300,000, 400,000, and now it's, say, lower by 50,000. It really doesn't matter. It doesn't mean anything until you sell it. So the payment, if payment is comfortable for the person, that's kind of the main thing. If it's you're not renting and you're paying for yourself, that's a win-win for in any situation.
And I can't agree with you more, because that's usually the conversation, and again, through these years, prices are high, all these things. And that's the first thing, we always, ask our clients, it's, are you comfortable with your payment? Is this a payment that you will feel comfortable making? Because again, like you said, you don't gain money and you don't lose money until you sell. So the goal is you don't want to ever be in a position where you have to sell if the market isn't in a comfortable place for you to do so. So as long as, you've looked at your numbers and you've said, okay, I could rent or I could own, and they're, approximately the same, even if owning is a little bit more expensive, the investment is, worth it. The numbers work. So, that's kind of the first thing that we kind of talk to people about is, are you comfortable with this payment? Are you comfortable with this payment for 2 years, 4 years, 5 years, 10 years? Can you, and then again, is this a property you're going to be happy with long-term, right? Because being forced to move isn't always a financial decision. Sometimes you're forced to move because your family expands, or you have an elderly relative who has to come live with you. Your house is so much more than just an abstract investment. It's not like investing in a stock where your only interest is to sell it for more money. There's a lifestyle aspect. So kind of to try to map out your life, for as long as you can, and say, okay, you know what, this is big enough. If I needed to stay here for X amount of years, I could. And if I decide later, it makes sense for me to sell and get something bigger, or sell and downsize, or do whatever, move a different area with another family member, you can do it. But to just make sure that you're comfortable where you are, so that you're never in that spot where you're forced, you know what I'm saying, to make a decision that might have a financial cost.
I agree 100%. It's just, we need to, a lot of people, they kind of either afraid to ask, or they think they're not going to qualify, or they saying, listen, I don't have a down payment, I don't have a stable job or something. There's a bunch of things that maybe they have in back of their mind, they want to move, but they kind of, hey, it's not for me, it's too expensive, this and that. There's million opportunities for people with like no down payment or with no income. But there's different things that we can structure it. And I just suggest to people that even if you don't have anything, let's say you have no job, no credit, no nothing, still ask, still come, and anybody can look at your file and just give you an advice. Let's say maybe in 2 years you're going to be ready. But if you're never going to ask, you're never going to get prepared for that decision or that move. And so that's kind of the big thing that I'm always telling to people. Even doesn't matter what your situation is. You don't have any money, good. Just still come. We'll calculate everything for you. We'll tell you, okay, this is how much you need to file. This is how much income do you need. This and that. So person understand what his options will be. But a lot of people come and say, you know what, I'm not qualified, I just want to check, and to check he's qualified and everything is fine, person can buy, but he was never kind of thinking about it in detail.
Right.
And also with like agents, I guess what I see that sometimes agents talk to a person and they say they want to ask all the questions that lender will ask. And they said, you know what, you're not probably going to qualify, don't waste time or something, but it's better agents are professionals, how to find the property and do all the negotiation, and lenders, do their own, all the number things. So when the agent and lender working as a team, and and it's a trusted partnership team that basically two people, or three people with the family, three parties can work all together and to find the best deal for them. This is the win-win situation every time.
1,000%. And, there's so many people who I talk to, like, same story, right? Well, I'm not going to be ready to buy for a year or two. So, I'm just going to hold off. And I think this is the thing is there's no cost to them.
Yeah.
I'm happy to talk to them, to give them information, to, teach them education too, right? So, a big thing out here in California is that we don't use real estate attorneys in our transactions. So, if I have a year to work with you, that's a year that I can send you, okay, this is the main contract we use. Let's read through it. Let's go over questions. I can talk to, please talk to a lender, because again, we could set goals about, okay, this is how much you need to save. Or sometimes, they're qualified, but there's a credit issue wherein they could qualify, but that if they wait 3 months or 4 months and fix their credit, they're going to get a much better rate. It's going to make much more sense for them. And until they start taking those steps, and again, working with a team that they trust, they're never going to know what that real picture is, what that real number is. And, from my side, I've had clients who've had, bankruptcies, clients who've had, foreclosures in the past, where we know that it's going to be another 2 years. They're not buying for 2 years because they can't, but we've used those 2 years to learn about each other. They've gone through different jobs at that point in time, where we've looked at this area, then, we've looked at, okay, this is going to be closer to their job. Does it make sense to shift? And, again, maybe it's a more expensive area, but, maybe they'd be happier with a condo townhome closer to work as opposed to a single family. And we've run these scenarios. Now, again, we're not looking at property every weekend for 2 years, but we're communicating and I'm sending them information. So over that 2-year period, by the time they're ready to go, I already know everything. I know what they like. I know what they don't like. I know past homes that have sold that have been their favorites, and we hit the ground running, and everything comes together so smoothly, so beautifully, because we spent those 2 years learning about everything.
So,
And they were in a good situation too, because yes, they had to wait for certain things to drop off their credit, but they also were in touch with the lender, so they could, you know what I'm saying, make some plans on this end or that end, or all those things that people try to rush and learn and fix once they're in escrow. It was already done for them.
For sure. And plus, want to add to that, the guidelines change every day, not every day, but really often. So let's say if 2 years was one rule, and in that time, if I know that your client is looking, and we have a same client, and we can tell, oh, listen, by the way, something changed like yesterday, a new rule came out. Now you can buy you don't need to wait 2 years, you need to wait 1 year, for example.
Right.
So there's the different options. By the way, I want to also add about like an update. So the new limits, they change. So every year, Fannie Mae and like Freddie Mac, they change yearly limit for the loans that they can lend on. And then basically from 2023, it's going to be 10% higher. But banks already starting doing it right now. So let's say we had a 647K loan amount, now it's 715. That's called conforming loan amount. And in LA County, we can go now from 970 loan amount to 1,073,000. So basically a person with let's say $1,000,001, or like roughly, can buy a house with minimum down payment, like 3.5–5% down, and afford, buy a house. This is great news for people who they don't have to put 20% down payment like a lot of people think. And in that price range, something can be found at least. It's more of, in terms of loan amounts. So the government understands that the price is going up. They want to adjust to the new reality.
Right. And I think that's also like such a good point too, because sometimes we get people who maybe, they're fortunate that they have more cash, right? But it doesn't always make sense. Like sometimes for a person, there's a sweet spot, right? Like, hey, you know what? You don't have to throw 40–50% down. You could do it this way or that way. And there's benefits to that as well. So I think that sometimes, I think on two ends of the spectrum, you end up with probably two different types of people who get hesitant to talk to lenders and agents. On one side of the spectrum, it's the people who think like, oh, I'm not going to qualify, or I don't want to tell them this, or this happened and it's embarrassing, or, anything like that. And then the other side, you get people who think like, oh, well, I'm just so overly qualified. I don't need to talk to a lender because I know I just know I'm going to qualify. I know I have excellent credit, and a lot of times they do. I have this, I have that. I know I'm going to qualify. But there's so much more to it. Like you said, the guidelines change, the programs change, the options change. And there's no way someone who's not in the industry, and even lender to lender stuff changes, right? And I know you have access to tons of, different investors too. So, it's very hard to say like, I'm going to go it alone and I'm going to be able to do it at the same level as someone who's, in the trenches every day, looking at, what I'm saying, all the numbers.
No, truly, 100%.
And so everyone can benefit. And I think that's one thing too, is that, we talk, and even this like discussion, it's very top line, it's very general. But when we have the opportunity to work on a client together, it's so great because, again, you can look at different cities, different markets, and even different property types within those markets, and they're performing differently. So we can, sit down and have a discussion and, really hone what we need to do for that unique situation. So their personal, financial situation, as well as what they want to buy and what their goals are. Whether those goals are, hey, next weekend I have to buy something, or hey, I'm not going to be buying something for 1 year, 2 years, 3 years. I really think that there's not a time that's too soon to start. Even if your goal is like, hey, in the next 5 years, I want to own a house, start now. Set your goals, get a good agent behind you, get a good lender behind you, and, collaborate with them. Because like you said too, sometimes you think like, oh, it's going to be 5 years off. And then you realize like, oh, this changed or that changed. And hey, you know what? I could do it now.
Yeah, time flies fast. So it's this 5 years, you never like you think, and it's already passed. But if you're not prepared, you're gonna start again you lose another year or two waiting for something that you might be fixed, long time ago. Because like you exactly, I mean, we see it a lot when a person comes and listen, everything's okay. I have $1 million in my bank. It doesn't mean, I mean, it's good, but it's not everything that bank. There's different things need to match all together in order. Sometimes people say, hey, listen, why? But the bank has their own logic, right? They have their own guidelines. They want to do loans. That's, but we know everything, how the structure works, how to prepare files. We've been doing this for many, many years. So, and like you said, exactly, like person used to come in and basically be upfront with everything, all the problems, all the issues, same as with us, same as with the agents. Listen, this is my situation, this is what I'm planning, this is what I can or cannot do. And together we can structure it, and it doesn't take long to get you a good idea of where you're gonna be, what your payment will be, which location it's better to stay, and like where schools and whatever district you want to be in. That's kind of all doable as long as person will make a first step and start preparing himself or herself.
Yeah. And also, like, that was the other thing I would say is, treat your agent and your lender just everything. Even if you think like, it probably doesn't matter, just tell us. It's okay. I'd rather, have more information than, have a surprise down the line that, we could have, dealt with, especially when we're working together long term. And I think the other thing too is that I think a lot of people are afraid to talk to agents or lenders because they feel like they're going to be talked into buying something that maybe they don't want to, maybe they're not ready to. And, my goal is to help my clients meet their goals. So again, if you want to buy a house, if you have maybe a life event coming up where you say, I have to do this by the end of the year, or sometimes there's financial reasons. Your accountant said, look, hey, this is the year you got to do it, then I'm here, I'm gung ho, I'm ready to go. If you want to sit and, talk numbers, it's simple math. You can work with your lender and we can talk about different price points, different interest rates, like how far would the market have to go down for it to make sense if the interest rate went up this much. We can run scenarios, give you all the information so that you can make the best decision for yourself. It's not about, pressuring you to buy. Like, that's my biggest fear, is that someone would decide to do something and then be unhappy with that decision later. And, I'm very thankful that that hasn't happened in my career. And I think a lot of that is that, we try to lay out all the options and give, the best advice. And sometimes too, we talked about like that credit situation, sometimes buying tomorrow isn't the answer. Sometimes it's like, hey, okay, you could buy today, but because of this situation, this is what your interest rate is. If you want, and I know a lot of lenders too, you can advise a little bit on credit, like, hey, if we could get this down, and then, I think in the next 3 months, you're going to be a percentage point down, it's just going to be so much better for you. Or, there's just so many different things that, can be tweaked. And I think the other thing about credit, and I just have to mention it because I've run into it so many times, is that the scoring model lenders use isn't the same scoring model that other creditors use. So sometimes, a lender will run your credit and your credit score will be better than you think it is. Or they run your credit and it's not as good as, you saw on, another
credit card model.
Right. And it's kind of like, well, what do you mean? So, and sometimes you're like right on that borderline, it's like a 5-10 point difference. And until you really start working with a knowledgeable lender who knows what they're doing, who can give you advice, you're just basically leaving money on the table, because once you find that property and you say like, oh, I don't want to lose it, it's exactly perfect, this or that, it's something that maybe you could have corrected a month ago, that because, you didn't want to take that step. Now it's kind of, you're stuck making a choice that you wouldn't have had to make otherwise.
Well, that's great. I just want to finish up saying, first of all, thank you. Alexandra and her, Sergey and Alexandra are both team that we've been working together. They're really great agents that really knowledgeable. And honestly, I'm not just saying that because we work with a lot of agents. Some agents just do like a 20% job of the agent, just making an offer and that's it. Alexandra and Sergey been involved like 110% in the transaction, helping not just, you know, as an agent, but all involved, like as basically friends in the for the client. So I would, they're a great team to work with.
Oh, and we have to, you know, extend the same. Obviously, you know, we've worked with Alex and his team, and I can tell there's certain lenders. I won't take, you know, I'm not going to talk forever, but you know, there's certain lenders you call and they say like, okay, well, call me when you find the property, and I'm like, I don't want to wait till then. Like, can we talk about this? Like, can you tell me what's going on a little bit? Well, just call me when you find the property and make an offer. Well, how can I put the offer together? I need to know, like, how long do you need for appraisal? How long do you need for loan? How long do you need to close? And again, there's so many other things I could structure in to make it better for the client. But Alex's team has just been so wonderful in that they always get back to me, my calls, my texts, you know, within minutes. You know, sometimes I get an apology if it's an hour, like, I'm so sorry, I was in a meeting. But they're just so wonderful and, you know, brainstorming and really, really collaborating so that we can do the best, you know, for the buyer. And that's just been so amazing. And we're so appreciative of that. So thank you. Yeah,
this was great. Listen, a lot of good info, and I'm seriously, I'm talking. What I said is not for the video, but it truly was how you guys worked. It's I don't see a lot of agents like you know your stuff. No, that's good.
We try. I mean, we're always learning. You know, it's like we're not lenders. You know, so
I know.
We're always learning and we're trying, and you know, so.
Yeah, we started to, we have like a small inside project that we want to put together like a class, educational class for agents, so they know what we are looking for, like what the things that lender might look for that you don't even think about it. Like there's some things like in HOAs, there's some details and this and that. So we want to put something together to just, you know, throw it out there so people can, you know, like, for example, agents, I don't know, you're a listing agent and you got FHA loan. A lot of people don't know FHA loan, and it's minimum down payment. They're not going to qualify, but it's not true. You know, if it's 3% or 20%, it really doesn't make. You can get denied the same or get approved the same. It doesn't mean anything, but you know.
And FHA now, like I haven't done one. I don't know if you have, but they do the spot approvals now on the condos. So I haven't done one, so I haven't had experience with it, but I've heard from other agents who've been through the process or have had buyers who submitted offers on their listing saying, hey, we can do the spot approval, and they got it done, which is a game changer.
For the building that's not FHA approved, right?
Yeah, right. Because, you know, before, like when you have FHA buyers and they want to buy a condo, it is so hard in our area. They're always expired. They're always, you know, it's like, there's just not a lot of options out there, but yeah, I mean,
I know some lenders, it depends on there's some lenders that have in-house, depends where we're submitting the file, they have in-house approval with FHA, but not everybody.
Yeah, that's another thing too, just in terms of like for agents, like whenever we take like a townhome or a condo listing, we always try to talk to the management company, and like we know they're not going to do our condo cert for us, obviously, but we try to, you know, break it down to like 6 top line, you know what I'm saying, questions, you know, like or like sometimes the seller knows a lot, like they know there's no litigation, they know, you know, certain things, so then we try to go to like the next tier of questions to bother the management company with. But it makes such a difference because, you know, there's somewhere, you know, there was like, and we hit it a lot during COVID, like HOA delinquencies or, you know, low reserves because people weren't working and then they weren't paying. And then, you know, a building that was 5% down, now, you know, we're looking at 10 plus owner occupied, 25 plus investor. And a lot of agents they take the listings and they don't know about that side of it. And then they end up accepting something that ends up having to cancel, unfortunately, you know? So, but I that would be, you know, so valuable. Like, I think to like other agent partners, you know, saying like, hey, when you take a listing, like give me the management company's number and I'll have a quick chat with them for you, you know?
That's cool.
Yeah. So.
Okay.
Well, thank you for everything.
Thank you very much.
Thank
So
you.
I'll send it into my guys. They will
Okay.
edit it. I'll send it
Okay.
to you so you can check if everything looks good.
Okay.
And then I'll ask him to cut like do a small
Like
like 30-second you know, reels and stuff.
Okay.
So if you guys want to share it and you know,
Awesome.
social. We'll
Yeah, and tell them to feel free to cut anything stupid I might have said. So,
no,
because I'm kind of just talking off the top of my head.
No. Listen, we're talking to people who, listen. All the information we said, it was great in terms of. If we're not talking to other real estate agents or lenders, we're talking about first-time buyers or somebody who will get appreciative of any information. You know?
Right. Yeah.
So everything was great. It was good. Next time we'll do something. You know, create. I don't know. Just came from Mexico yesterday. I don't know if I'm sick or something. I'm just standing on a little bit, my foggy head a little bit. So we'll see.
Well, you sound great.
I brought some Mexican bacteria here.
Let's hope not.
Okay.
Let's hope not. Well, I've heard people who've gotten sick in Mexico and it is intense.
Yeah.
So I hope that's not your situation.
I hope so.
But you'll get through it. You know, lots of fluids, I guess. But well, thank you. I know you have a meeting or something you have to get to too. So
All right, Alexandra. Yeah, we'll be in touch.
Thank you so much. Feel better.
Thanks a lot. Thank you.
Bye.
Bye-bye.